Fine, thank you. Good afternoon, everyone. Beauty of starting a Zoom meeting in three is the fact that you can say afternoon and have everybody in the country think it's the afternoon. I suspect, as all of you know, effective today, the Department of Labor's new rule on management and administrator overtime takes effect. And the essence of that rule is they changed one component of the rule, and that was the amount of salary you have to pay. So for managers and administrators that meet the other standards, you used to have to pay 844. You have to pay $844 a week now, whereas in the past it was 684. So it's raised by about $180,000 for you per week. The salary has increased up to an annual amount of $43,880. That rises again in January of 2025. So this is just effective for the last 6 months of this year. It then goes up to $11,128 a week, or $58,656 a year. And that's the minimum salary you have to pay someone who otherwise qualifies as a manager and administrator under the Department of Labor laws in order to avoid paying them overtime. The new rule does allow you to pay up to 10% of that salary with what they call non-discretionary bonuses. And a non-discretionary bonus is a bonus that is set to some standard, whether it's sales standards, it's commission, it's some type of gold achievement, which lowers the amount by 10%. So obviously, from now till the end of the year, you'd have to pay $759,060 a week, or $39,500 a year approximately, to fall within the management overtime exemption, administrative and average management overtime exemption. You do get within the last pay period of the year to make up whatever difference that is. So if you have an annual commission or bonus system, you can have that paid so long as it's paid by the first pay period of the prior year. I should note that while the Department of Labor issues weekly and annual salary amounts, they're not trying to change how you pay people. So if you pay people twice a month, you take the annual amount and divide it by 24. If you pay them once a month, you divide it by 12. If you pay them bi-weekly, it's a little more complicated. You have to divide it by 52 and then multiply it by 2. They come up with the 52 weeks. It's more than a half a month's salary, obviously. Each month holds more than 4 weeks. They also have what are called highly compensated employees, and those employees that are paid substantially more money. And that salary is, you have to pay them at least the management's administrative salary of $844 a week. Again, adjusted for what your normal pay periods are, but you have to add it up to close to $133,000 a year. So anybody who at least has some management or administrative responsibilities as defined by the law and make at least $133,000, they will be exempt from overtime, whether they otherwise fit any other definitions. That number goes up to $151,000. So this is quite an increase for most of our folks that we've looked at. So the next question is, what do I do? Do I just raise my salaries? Do I convert people to hourly? How do I deal with this? We did send out the sort of a 4-page little list of trying to answer those questions. But I will tell you, the very first thing you need to do is to check to see whether your managers and administrators otherwise qualify for the exemption, because while the hourly amount is mandated, or the annual and weekly amounts are mandated, you also have to qualify as a manager, and that requires you to have a duties test. And that duties test is a manager must manage some recognizable part of your business, whether it's a subdivision, whether it's a store, a warehouse, a flooring category, a sales team, a warehouse group, whether it's a shift manager. They have to have some managerial duties. They have to oversee regularly at least 2 employees, and they have to have a significant input on the decisions to hire, fire, or promote employees. Those are your management skills. So unless they qualify on that standard, and they have to be paid a fixed amount at each salary period, which means they're paid the same amount regardless of how many hours they work that week. If they work less, they still get the same amount of salary if they make more. So those, before you even think about changing salaries, make sure your managers qualify for exemption. Because if they are, then this increase has, if they're not, excuse me, then this increase has no impact on you. They weren't otherwise qualified to be exempt from overtime anyway. For administrators, they must perform non-manual work that's directly related to the business operation, and they have some independent judgment on matters that materially affect your business. So they're more than just the bookkeeper, or an administrative assistant who doesn't have true independent judgment rules in order to qualify. For the highly compensated folks, they just have to be paid. They have to have at least one of the management or administrative skills duties. They have to have some, either they can have some regulatory oversight of 2 employees. They can have an input on hiring and firing, or they can have some responsibility for a subdivision or a grouping of your folks, or they can perform non-manual duties that have an impact on your business. So long as they have one of those things are defined. So the next question, should I raise salaries for the folks that do qualify? And this is not as insignificant, because once you do the first salary increase, remember that's the smaller of the 2. While the first one went up by a little under $200, the next one goes up by about almost $300 per week, or increases by about a little under $15,000 a year, whereas the prior one was a much smaller increase. This initial increase was not quite as dramatic as it went from 35 to 43, which is certainly about half of the increase. So if you're going to make this management change, if you're going to start raising real salary, remember, this is just a 6-month stopgap. After that, you're going to have to go back up to the higher number anyway. So it's probably a smart move to start to look at whether you're going to meet those prior numbers come January if they become effective. Also, just look at how your people work. If your manager really does overtime, if your recognized or administrator really does overtime, it may certainly not be worth raising them to get the non-exempt, provided you have the systems by which you can track their hours. So to me, the key question for you is you got to look at the economics of it. So someone who is, working 50, 60 hours a week, they got a lot of overtime in that. You got to look at that overtime. You got to figure out what the value of that is. And then you have to figure out whether you want to raise their salary sufficiently to avoid having to pay overtime in that 10 to 20 hours a week they're averaging. So that's the first economic questions. They're not uncomplicated. We're happy to help you go through them. But you're going to end up getting into bringing up your old algebra formulas you used to do, to be honest with you. One of the questions I'm asked all the time, do I have to convert all my managers and administrators to hourly employees? You don't have to convert them. You can continue to pay them salary-wise. But you have to then calculate a regular rate of pay. And the regular rate of pay is that you take what they're paid, what their salary is, you divide it by 40 hours. No matter how many hours they work, you divide it by 40 hours. And that's their regular rate of pay. So I gave an example in the thing. If you're paying someone $6,000 a year, which is about $3,250 a year, or 30 something there, close to 35,000 a year. Their hourly rate of pay is that $600 a week divided by 40 gives you $15. I don't think their overtime rate would be 1.5 times that. So that would, if you were paying them overtime, would be $2,250. So you can calculate their regular rate of pay to calculate their overtime without converting them to a pure hourly employee. But you got to keep track of their hours, whether they're salaried, whether you're continuing their salary base, or whether you're doing something else. And you also have to take into consideration if they're working less than 40 hours a week, you want to make sure you have that ability to adjust downward as well. Because otherwise you're paying overtime when they're working extra and not getting the benefit of less payment when they're working less. But you don't have to automatically convert them if you don't want to. You also have to be prepared to track hours. You have systems for your hourly employees. How are you going to put your management into that? And you're going to have to train those managers that do have responsibility for tracking their subordinate managers and administrators, how to make sure they can track those hours and keep them accurate and honest. And that becomes more complicated in businesses today, where you may have employees that work off site, and you already deal with that with salespeople, I'm sure, and maybe even some of your installation management people. But you need to be able to make sure you have systems that do that. The next question is, okay, well, I'm not going to be able to raise my manager's salary. I'm going to use the example of somebody paid $35,000 a year. I'm not going to suddenly be able to jump them, up to, to a 40-some thousand dollars, and then up to almost $59,000 as of January. I can't. I can't. 1.5 times their salary. So what do I do? Well, I use the example in our little thing of somebody who's paid a base salary of $35,000 and they average 50 hours a week. Well, if you take the $35,000 and divide it by the 40 hours, you come up with a fairly high hourly rate. And you're going to pay overtime for that extra $10. You actually have to lower their base salary to account for that salary. And I can give you the algebraic formula if anybody wants it when we're done here, of how to make that conversion for you, no matter what the salary is. It's an easy way to figure that out. But I don't think you want me to particularly go over that. Again, you need to train. You need to make sure you have systems in place that allow you to track hours if you're not going to convert over and raise their salary to meet these standards. Those are things you're going to have to look at and figure out that. And by the way, that may have a cost that may say, I can raise the guy. I don't want to raise the guy $6,000. But when my people. But when I look at the difficulty of tracking that and keeping everything and putting in a system that works, it may actually be cost effective. But those are decisions that are business decisions, not ones that a lawyer like me can make. We know 1,000 ways to run your business and have never run one. So we're lawyers. We're trying to give you the rules to operate under, not tell you how to operate. I want to warn you, you can't use comp pay rather than pay overtime. So you can't sit there and say, okay, well, you work 50 hours this week, you only got to work 30 hours the next week. There is allowed if people have flexible work schedule, but flexible work schedules basically mean they don't have any set hours, but they're paid based upon the hours they work. So there you're allowed to do that. You're allowed to kind of convert comp time to hour time based upon the hours they work. Usually they're paid a fixed salary and no matter what they work on, but they can come to work anytime they want. They don't. Those are fairly, and that's a much different analysis. We've actually written an article on regular rates that will explain some of these rules to you in the premier floor covering, and it may be worth going. I wanted to mention that commissioned employees are not covered by these rules. They have their own rule, and they don't. Their regular rate of pay has to be 1.5 times the minimum wage for each hour worked in a work week, and they have to make half of that at least through commissions. And if they qualify under that they're depending on the state you're in, whatever that 1.5 times that rate is. And so long as half of that comes from commissions, they're safe. You don't have to pay overtime for them. I do want to mention, however, if you pay piecework, be aware, piecework, you still owe overtime. So if somebody works more than 40 hours for piecework, and you're paying them piecework rates, you have to calculate an overtime for that. And again, if need be, we can go through how you do that calculation. It varies a little bit by state. California is a particularly complicated rule on doing that, but the federal government requires you to pay overtime on that. And again, as I mentioned, we have state laws. You have to look at your state laws. Some state laws have higher minimum salaries. Some state laws, such as Alaska, California, Colorado, New York, and Washington, have higher minimum salary levels for exempt employees than the federal government does. Some states, I believe Alaska and California, require overtime in any 8-hour day worked as opposed to 40 hours a week. And other states like Florida, Oregon, and Colorado have 10 or 12-hour work weeks. Anything over that, days, I mean, anything over that is overtime. So you need to look at all that. I want to warn you, there's no small business exception unless you make less than $500,000. There's a typo in that thing. It's $500,000 a year in gross sales. And with that, I just like to open it up to questions because there's an awful lot to dump on you folks very, very quickly. If anybody has questions, let me know. I'm trying to look at the chat box. I don't see them there. You're all muted, so if you want to ask anything, you're going to have to open it up. But I'd like to get your questions because I'm sure there's some. I can go through this in more detail, anything you need. But I wanted to warn you that as of today, if you have exempt managers, administrators, you have to look at these salary levels and make these determinations. The final thing I do want to let you know, it is being challenged. And as you may recall, there was an attempt to raise the salary level in 2016, and the courts enjoined it. They didn't let it move forward. There is a challenge raised now, but that has not been enjoined for this first level. That nobody's sought to enjoin it immediately. And so that is why we're pushing you to be aware of this, because effective today, those salaries do apply unless some court intervenes. Given this week's Supreme Court decisions, particularly on administrative rights, you may well find that it does ultimately get enjoined and the higher salary level may not apply. But I do want you to be aware that, and we will keep you aware of when and if the courts determine that this is not a proper administrative change in the rule. But with that, I'd love to have your questions if you have any at all. I've gone through this awfully fast for you. Jim, you always have.
Yeah, Jeff. One of the biggest things that I have seen throughout the industry working with a variety of clients is a real lack of understanding of non-managerial salaried employees and overtime. They feel, the very example that you use, I'm not paying them $50,000, I'm paying them $30,000 and expecting 52 hours a week so that works out to the numbers that I'm going to pay them a salary. And failing to understand that they've just set themselves up if somebody goes to wage and labor because they don't qualify. They're not a manager.
That's a good point, Jim. I want to stress that again, is that overtime is owed whether you pay a person a salary or whether you pay a person piece rate, and possibly whether you pay them commissions, depending on whether the only exemptions are the exemptions we talked about, which are there's management administrative. There's also professional exemption for if you have computer people. There's things that you probably don't, you have lawyers hired on. We don't get overtime no matter what we're done. There's exceptions for things that really don't apply to you regularly. But unless you fall into one of those exceptions, which is this management exception, where you truly manage or administer with authority and supervise people and have at least two people you're underneath or make major business decisions, you're not exempt no matter what you're paid. And simply paying a salary doesn't exempt you from overtime. It just makes the calculation different. It's the only thing it does, and it's called the regular rate calculation. And we actually have an article again on regular rate in the old in the Premier Floor Dealer magazine. But all that does is you take the actual salary, divide it by 40, and that becomes your hourly rate. Anything worked over those 40 hours then gets 1.5 times that regular rate that you just calculated. And the example we gave is whether you're paid $600 a week, you divide that 600 by 40, gives you $15 a week. But if they work more than 40 hours that week, then you owe them not $15 for that 10 hours. You don't owe them, you actually owe them $22.50 for that. So if you take that extra 10 weeks, you owe them another, $225. And that can add up very quickly if you're not cognizant of that. And that applied before this rule. That's always been the rule. So, I cannot tell you how many clients I have who have an administrative assistant, she has no authority, or they have a bunch of, bookkeepers, and they pay them a salary amount, and they don't think they ever have to pay overtime. And that's not true. You have to fit into the category to avoid overtime. And again, if you're in one of these weird states that have daily rates, in other words, 8 hours in California, Alaska, 10 hours, I think it's in Florida, I think it's 12 hours in Colorado. If you have one of those states, that actually you have to actually judge it by the day as well. You can have a regular rate. In some of those states will allow you to work, 4 10-hour days. Florida and Colorado and some other states specifically laid their numbers at 10 or 12 hours so that you could have those, bunch of hours together. But California does not. After 8 hours, you're owed overtime. And the same with piecework. If you're paying a piece rate to your people, you have to determine the hourly rate at the piecework rate. And that basically takes how much you paid divided by the hours they worked minus any non-working hours that they're allowed to have, and that'll give you your piece rate. And then any hours they worked over 40, they get time and a half at that rate that you've calculated. So you have to actually calculate an hourly piece rate for every one of your workers as they work, because you have to figure out how much that rate is valued. And then you have to pay overtime on it. And that's the one thing I noticed with most of particularly our smaller members, that they don't have a real good accountant or somebody, they're just running out their taxes through the local accountant that doesn't look at these hourly things. You guys aren't paying that, and you can get yourself in trouble. It's not just federal government coming after you. The problem is many of these, many lawyers find this is a gold mine, because if they can get you, if you have 10 employees and they can suddenly run this thing up to, it doesn't take long for 4 to 6 years of not paying overtime to run up into hundreds of thousands of dollars. They can make real money off of these actions. And they bring all these little class actions and all these little actions. If one of your employees complain, they're going to go after all your employees to see if they have the similar case, because they make money off of it. So be aware that this is a real risk. And I hope you folks are understanding that risk, because otherwise we are going to find ourselves in some issues that I think would be problematic. Thanks for bringing that up, Jim. But those are issues that I think many of our members don't quite grasp. I know most people on this phone call are people who want to be informed. So I expect most people on this phone call are informed and understand those rules. So I always find myself with these things, the funny thing is the people who listen are the people who already know. It's the people that don't listen I'm trying to get to. So if you have some folks of yours in your groups or you may want to warn them about this, because I'm not sure everybody got the word. Some other questions, please. I'd love to answer them. Everybody's mic's off, so I just need to know. If not, I don't want to keep you from your daily activities, but you can always contact me. My address is jking@joneswalker.com. I'm more than willing to redo this seminar at any time. I'm more willing to help answer your questions. Just send them to my email again, jking, K-A-N-G, @jones, Jones, Walker, WALKER.com. And I can answer any one of those. Also, when you signed up for this, you notice there was this little cheat sheet we gave you. It expresses what I said today. And you can utilize that. If anybody wants to know how to make these calculations of how to adjust salaries, it's a simple mathematical formula. It takes you back to your old algebra days in high school. But it is actually quite simple, but it's probably worth explaining.
But I do think, Jeff, that the option of finding someone, you actually look at this and realize, oh my gosh, they are subject to overtime. They are not exempt. But the option of reducing salary to bring their pay back in line with overtime is not one that most people consider.
No, it's not. It's not one I even recommend, because you're going to have people. The fact that they got to now have to track their hours is going to piss people off. And the only option is that if you have people that really don't qualify and you need to look at their overtime pay, at least this new rule gives you an excuse to say the government has changed the rules and I'm required to do it. So it may give you actually a little cover to say why I'm suddenly imposing upon you to track your hours, to check in, check out, track hours all the time. So it may give you a cover why we did it. We all warned that last time when they made this earlier rule. We said, I think the rule is going to get enjoined, but the fact that they put this rule in initially, we actually recommended people make no changes. We were so certain the rule was going to get enjoined at that point. This year, I'm not as certain. That's why we're doing this, at least for this first change. But we did tell you, you can use this as a cover to start tracking hours for your folks. For one, that'll help you get a better understanding of whether, if another new rule, this rule may go away, that may be enjoined, but they may keep the salary level where it's in, or they may just raise it by another 5,000, but it lets you have a better understanding of what your hours are of your employees. So you know whether, do I raise them by that 5, or do I just start keeping track of and just start paying the overtime? There's a lot of ways to do this, but I would take this as an opportunity, not just a problem, because it allow you, for those employees who've not been paying overtime that you're required to, no matter what they're paid, it may give you a good opportunity to fix some of those things for the future and minimize any risk you have in the past.